again. The Dow-Jones Industrials dropped 445 points. The S&P hits 11-year low. The Dow-Jones Industrials dropped another 445 points today, and the Standard & Poor's 500 index fell to levels last seen in April 1997. So, taken together, stocks have now fallen 50% from their 2007 peaks. What does that tell a person? If it can drop 50% in 1 year, perhaps it could drop another 50% in one more year. And that's the end of that. No, these are not normal times. Citigroup falls below $5, and officials may sell assets or seek a merger partner. Crude oil drops below $50, slamming energy shares. And in the end, they couldn't even buy or sell. And Congress defers a decision on aid to automakers until, at the earliest, sometime in December. The latest chapter of the great crash of 2008 left investors staring at the reality that the value of the U.S. stock market has been halved in approximately just 13 months. Well, it doesn't sound like there's much more to go, because for the sake of the elect, the Lord of Light has shortened the days. And that's the biggest overall market decline since the 83% drop between 1930 and 1932, according to the Stock Traders Almanac. As the selling erupted, few areas of the markets were left untouched. Not even utilities, historically a safe haven for investors. But there's never been a time like this, and there's never going to be a time like this again. The sell-off was due to rapidly falling oil prices and uneasiness that Congress and the BUSH administration, yes, that's still a four-letter bad word, couldn't agree on a rescue package for the automakers, and even more bad economic news, including the biggest gain in weekly jobless claims in at least 16 years. The Dow Jones closed at 7,552, off 5.6% on the day. The blue chip index finished at its lowest level since October 10, 2002, the day after its 2002 bottom. It was the Dow Jones' second loss in a row and seventh in the last 10 sessions. There is something about all these numbers. And yes, numbers do tell a story, and they do mean something. The S&P 500 was down 54 points, or 6.7% to 752, its worst close since April 14, 1997. The close also was below 776.76, the closing low in the bear market that erupted after the dot-com bust and the September 11, 2001 terror attacks. So, in all kinds of ways, this crash or crisis is turning into a real catastrophe, and it's worse than all the things before, isn't it? The Nasdaq Composite Index was down 70 points, or 5.1% to 1,316, its lowest close since March 12, 2003. Crude oil fell to $49.62 a barrel, down 7.5% from Wednesday, and its first close below $50 since May 2005. The price break sent energy stocks sharply lower. Meanwhile, financial stocks were battered badly, with Citigroup down 26.4% to $4.71. Citigroup shares have fallen 50% this week alone and are down 84% this year. This crisis is extremely acute. It is turning into a catastrophe, a financial catastrophe. The Wall Street Journal reported late today that company executives have begun weighing the option or possibility of auctioning off pieces of the financial giant or even selling the company outright. The company's board will meet Friday to discuss the prospects. And that news caused some more downward spiraling of the stock, which was up 7.6% to $5.07 or $5.07 in after-hours trading. The Dow-Jones Industrials has fallen 945 points this week, and many observers and people believe it has become terribly oversold. Prices of stock index futures were rising this evening, suggesting that perhaps, well, maybe, some investors agree, or maybe not. Stocks in Japan, Australia, and New Zealand opened lower. Anyway, as bad as today's numbers were, a number of economists believe the U.S. market has even further to fall. Some say that the market will see a number of short-term rallies, perhaps, but they won't last. The S&P could drop first to 600 and then possibly to 400. We're looking at a very serious decline, or maybe even worse. The preferred place to park money today was Treasury securities. Their yield on a 13-week Treasury bill fell to 0.005%. That's mighty low, which basically meant an investor was paying a premium for the safety of just simply getting his money back. That's kind of like putting it under a mattress or in a closet. Meanwhile, it seems to get worse every day. Yes, there's something going on here that's much bigger than all this, and everything is interconnected or connected. It's a lot more than just this too, isn't it? Volume was heavy, with 2.2 billion shares traded directly on the New York Stock Exchange and 3.2 billion shares on NASDAQ. Both were approximately a third more than average. While Citigroup and J.P. Morgan were the Dow laggards, energy stocks were the weakest link. Yes, they're falling rapidly for the market overall. Today's selling left the Dow down 47% from its peak in 2007. What's 4 plus 7? 11. A standing still is the number 11. And the S&P 500 down 52%. The NASDAQ has lost 54% of its value. The Dow is down approximately just in this month alone 19%. Yes, in 1 month. With the S&P 500 down 22.3% and the NASDAQ off 23.5%. Since peaking at 1,565 in October 2007, the S&P 500 has lost $6.69 trillion in market value, according to S&P Index economist Howard Silverblatt. That loss is nearly $1 trillion more dollars than the $5.76 trillion lost during the entire 2000-02 bear market. So this is happening much more rapidly, and it's much more immense or huge. It's much more than all that. There's never been a time like this before, or times like these, and there'll never be a time or times like these again. These are, or these be, the end times transition days, and for the sake of the elect, the Lord of Light has shortened the days. It could very well be. So nobody should assume that it might go to 2012. It could happen any minute. It might be only a very short time away, a year or two, hardly more than 3. So people need to get ready, and they better start reading the Holy Bible, because it tells the story. It foretells how it's going to be and all these things. And these are more signs, and there are many, many signs.